Okay. Good evening, everybody.
Yes, sir.
Good evening, sir.
All right. You can hear me clearly, right?
Yes, we can hear you.
All right. Please, I would like us, immediately the class commence, I would like us to mute our mics and where there is need for any interference with the class. Still trying to wait for others to join.
All right, Mr. Benson, I'll be off the class now. So
All
I've
right.
shared the YouTube link with you. All right, thank you.
Okay. Thank you. I hope most of us can use the chat box. So in case we have any question, just drop it on the chat box. All right, I think we can start. I have more than 50 persons in the class already, so we can start the class. Please, can I get a response from us? If you can hear me clearly.
Yes. I can hear you, sir.
Yes, we can hear you.
All right.
Yeah,
Yes,
can
go
hear
ahead.
you.
Go
All
ahead.
right. Thank you so much. All right. Thank you. So good evening, everybody. My name is Adeyemi, and I'll be one of the tutors that will be handling your audits for this diet. The last class that was taken on Tuesday, Mr. Kabiru commenced the class and started with the meaning of audit and assurance, went ahead to discuss about the duties of an auditor. And I also went through that class. Some of us asked some critical questions that was important. One of the questions between audit and assurance, in which Mr. Kabiru was able to provide rather justice to that. So I'll be kickstarting from where he stopped, and I will just shed more light from where he stopped, then we'll proceed from there. The last thing he treated was response was the last thing he took for that class. And the question that was asked by somebody that says, I think a lady asked that she has been having confusion when it comes to audit, assurance, and he was able to tell the person that assurance is like an envelope. Audit is only a part of assurance. So to add to that also is that when you're saying something is assurance, you're giving the confidence to what I'm saying now. Trust it, hold on to it, and believe it. Now, in all these audits and assurance that we are talking about, there is a need for regulation. There is a need for a system to be put in place. So we will just not be doing anything we like in audits. So as a result of that, there is what we now call a body I believe every one of us, we are not new to IFAC. We are not JJC to IFAC. And IFAC is not something new to us. Now, IFAC is a body that was set up, put in place to say, see, as we are carrying out auditing, we are trying to check the financial statements being declared by companies. How do we trust these financial statements? The owner of the companies are shareholders. The shareholders are not part of the day-to-day activities of the company. At the end of the day, management is put in place to manage the whole resources owned by the shareholders. Management are now meant to give a report at the end of the year. The report is what we refer to as financial statements. Since shareholders are not part of this system, how do they tend to trust these very financial statements? That is where we now say there is a need for audit and assurance. We then said, where there is audit and assurance, there is need to be a standard, a law, a system that will also guide the way it is done. So we will not just have it being done any way you feel like. So as a result of that, there is now a body. The body is not just limited to Africa, it's not limited to Nigeria. The body is all over the world. And that is how we come to understand IFAC, International Federation of Accountants, IFAC. So IFAC is a body. If you choose to mention and say it's an association, as the name implies. So IFAC came into place, and we're saying, the question you'll be asking is, if IFAC is in place, what do they do? What are the things that you must have heard about IFAC? And now you are hearing IFAC. So what is it that is all about IFAC? Why is IFAC having so much power? Why is it that IFAC has influence on not just, they even have influence on IPSAS, they also have influence on, as we comment, auditing at play. What are the roles audit standards play? And this role said an audit is to provide a high level of assurance to the users of financial statements. Now, this assurance will give greater value to users if they know that the audit has been carried out in accordance with an established standards of practice, which are common to many companies in different countries. International standards on audit apply primarily to statutory audit process, but can also be relevant for internal audits. Most times, when it comes to audit standards, most of us we are good to go, but most of us don't know in depth about international standards on auditing. International standards on auditing. This is also put in place in order to give assurance to shareholders, users of financial statements, for them to say, this financial statement is showing true and fair view. How do we get to know it's showing true and fair view? There is a standard somewhere telling the auditor, telling the assurance personnel what to do, how to check before giving a report. Now, it is not just for external auditors alone when it comes to audit and assurance. International standards on auditing can also be used for internal audits. It can be used for internal audits. It can also be used for external audits. So internal auditors can make use of it. It guides the internal auditors. It guides the external auditor. So falling back to IFAC, because ISA did not just come into play. ISA did not just apply, did not just appear suddenly. The body that regulates, that ensures these things are in place, that body is what we call IFAC. Now, IFAC has 167 members. IFAC has 167 members and associates of over 127 countries, in which Nigeria is one of the associates. And even ICANN is a member of IFAC. ICANN is a member of IFAC. Now, since IFAC is a body, association that regulates internationally, so what do? IFAC are in charge of issuing what we call financial reporting standards, which you and we are conversant with when it comes to IFRS, IAS. 95% or let me say 100% of us, we know, we must have heard of IFRS, IAS. IFAC is in charge of issuing that standards called IFRS or IAS. IFAC is also in charge of issuing what we call IPSAS. Some of us are not new to IPSAS also. For some of us that will be writing public sector accounting, IPSAS. IFAC is in charge of issuing that very standard also. Another standard being issued, which I've mentioned earlier, is International Standards on Auditing. International Standards on Auditing. That one is to guide everything about audit and assurance. IPSAS is guiding everything about public sector. IFRS is guiding international ethics standards. That one is trying to guide all professionals in this field, how we are to behave, the ethics we are to imbibe, what to be done when issues arise. When you encounter one or two issues while carrying out your audits, externally, internally, what do you fall back on when there are issues? How do you communicate? Which body do you communicate with? Who and who do you relate with? Ethical standards that guides professionals in and out in the whole field of audit and assurance. Then IFAC has 4 boards. 4 boards, majorly 4 boards. The 4 boards are board IAESB, International Accounting Education Standards Board, IESBA, International Ethics Standards Board for Accountants, then IBSASB, which is International Public Sector Accounting Standards Board. So quickly we will go into each and every of these boards and try to see what and how new standards are being introduced majorly. Now, if you look at the first one, which is International Auditing and Assurance Standards Board, that is IAASB. For IAASB, is an independent setting high quality international standards on auditing, assurance, and other related standards. Now, in doing this, they try to enhance the quality and consistency of practice, not just within a geopolitical zone, no, throughout the world, in order to strengthen public confidence in auditing and assurance profession. Please note, when it comes to audit and assurance, you are trying to give people, which goes just beyond the shareholders. A vote of confidence, whatever you are passing across in terms of your reports in audits. So if I carry out an audit assignment and in the end, I'm saying, with all what we have checked, the financial statement of so company ABC is good. There is no material misstatements. All standards has been complied with. The report can be relied upon by shareholders, even those who contributed capital beyond the shareholders, that is the debenture holders, the public, government, creditors. They cannot rely on that report. That's what we are saying. So on the long run, even 2 years down the lane, 3 years, do you know you can still be called back on the basis of that report you gave? Because maybe after 2 years or 3 years, the company starts having an issue of what? Continuity. Then what do? We check the reports you audited last time. The assurance you gave already made people to proceed with the company. New investors came in. Previous investors were confident enough that their fund is safe. And now, 2 years down the lane, the continuity of the company is being threatened. When we checked, we saw that the report you gave, the assurance you gave, was not supposed to be given. Did you see where we have issue? Now, on the long run, if you are to be held accountable, what you'll be held accountable for is on the basis of these standards. That when you carried out your job, did you follow the standard? Everything you executed, were they in alignment with the standards? And was the financial statement prepared in alignment with the standard? So you see why it is so important when we're talking about this body being set up, in order to ensure that when you are giving an assurance, you are giving it to the public. So this body are in place to also checkmate, to see that every standard are adhered to, and not only that, where there is a need for so a standard cannot remain the same for the next 10 years. Issues are going to come up. Professionals will report issues to the board, trying to tell the board, this is what I encountered, this is an issue, there is no standard that is addressing this matter, we need a standard, we need this, we need that. So in our field, the standard is looking like a law, a constitution for us that we fall back to, that we fall on when we have items to treat, issues to address. So the International Auditing and Assurance Standard Board, they are to give high level of confidence to the public, so that the public can trust the auditing and assurance profession. Now, the next one is, what are the process of producing a new standard? We have a process. Most times, I think once like that, a student once asked that all these standard, IFRS this, IFRS that, IFRS this, IFRS that, how are these things coming into play? Why? What is? There's a process. Those things are not just coming up like magic. There is a process. So the first process is, there is a subject that must be selected for detailed study. A subject must be selected. A subject must be selected. And now note, those subjects are selected on the basis of sometimes complaints from professionals in the field worldwide. Complaints will come in, issues they have encountered and they have not been able to address because they tried checking the standard. They could not find anything in the standard to hold on to as a basis to make decision. So they will forward their complaint down to the board. the board will now look into it and make it a subject. So a subject will be selected for detailed study. Upon selection, after a period of study and research, if there is an agreement to proceed, an exposure draft will be produced. Now, when we are saying exposure draft, we are trying to say this exposure draft is like a draft that will be made, not a standard yet. A draft will be made, available for everybody to access, check, look at it. It will be produced after it has been, it must be approved by the board before it is issued out to the public, to the professionals. They must assess it. Now, while assessing that exposure draft, they are to give their comments. They will give comments. They will also give, they will propose the right way it should be done and what they expect to be done. This will be done. Everybody, you submit it on your on the exposure draft, forward it to the right channel, which will be given. Then that's the third one we are looking at like that. That says, the third part says, trying to bring it up. Okay, it's not coming up like that. So the exposure drafts you propose, we will look at everybody's opinion, check everybody's opinion, assess everybody's opinion. After looking at everybody's opinion, they will then consider, okay, with what has been said, what should we do? Okay, let us adjust. Let us try and see if, let us try and see with this exposure draft, the comment received, the agreement, then the draft standard to the public is not just something of 1 week, 2 weeks, 3 weeks. No. It takes a lot of time before you get to see a new standard. That is why before now we have IAS. Now we are migrating to IFRS. If you check properly, we are not having everything just on a straight line. Since we said IAS, we are moving to IFRS, so we just move everything. No. It's a process, one after the other. The migration will take stages, steps. So for any new standard to be produced, we have these 4 steps. The first one, a subject is selected. The second one, exposure draft will be issued for people to comment and propose amendments. Upon that, everything will be summarized, modified, and approved. Then the standard will be issued for usage. With that, we can then move to the next subheading, which says ISAs and other related standards. When it comes to ISA and other related standards, we are looking at ISB does not only issue out ISAs, they also issue international standards on quality control, review engagement, and other related services. Now, let us check the table below. There's a table below we'll be checking, which is the type of standards that we are to look at, which is being used. The first standard says international standards on auditing. International standards on auditing, which we just checked. That one we always deal with auditing historical financial information. Please understand, the information they are using to prepare every financial statement, they are all past information. So whenever you're applying ISA, you're only applying auditing on historical financial information. The second one there under the type of standard is also international standards on review engagement. Now, there's a difference between review and audit. Even when they are interwoven. When you are reviewing, you review historical financial information. Now, the standard that govern that, we have it as international standard on review engagement. So I'm defining many on or review of performance. Many ways, assurance can sorted out for one part and help us check our compliance level. Give us an assurance on our compliance level. That is what we need you to carry out. That is a possibility. They can ask you to do that. Another one there is also international standards on related services, which is on anything compilation, agreed upon procedures, and other related services, which can be requested of you. International standards on quality control. This one, there is no joke about this. If you look at what is in front of it, it says, for all above services, for every professional services you're giving, ensure you check the quality control, because that is also to check our work, what we are doing as auditors, what you're doing as an assurance person. What are you doing? What are you giving out? The quality control of that very service must be checked. All right. Moving forward, we said notes that the IASB pronouncements do not override local laws or regulations. If local laws or regulations differ from or conflict with the IASB standards, then local law overrides. Why do you think this is? Why is the stand? Why do we have to say if there is an issue like this comes up? Why do we say let the local law override? Being that the local law understood what is going on within that system. So if something like that comes up, then we are saying let the local law stand. Let it override whatever the standard is saying. But please note, each standard has an introduction, has objective, definitions, what auditor is required to do, and application of every standard is explained in detail. The basic principle and procedures must be followed. In exceptional cases, a professional judgment may be used by an accountant. Please note that part. In exceptional cases. And these exceptional cases will also require you to say, oh, before I arrive at this decision, I contacted so person. I was able to reach out to a professional colleague. It includes that if you have any challenge like that in the field. All right, still on ISA 200, the heading says overall objective of the independent auditor and the conduct of an audit. I strongly believe some of us already are auditors, that is, we are practicing. Some are already learning. Some of us, we are training. Why some of us, we are not training? We are also, some of us are professional already in the field, but we have to write the exam. Now, looking at the overall objective, of an independent auditor, as stated by ISA 200. The objective of the auditor is to obtain reasonable assurance about whether the financial statement as a whole is free from material misstatements. Is free from material misstatements. I want to assume that this material misstatements, some of us we have understanding, some might not. So in a quick way, let me just say, when you're talking of material misstatements, it means when an information is part of your financial statement and that information will influence the decision of a user, it means it's material. That information is material. Where the information will not influence the decision of the users, we say is immaterial. But there was misstatement, but it is immaterial. Now, an immaterial misstatement put together, if it is more than one figure, you put it together, and by the time we put immaterial plus immaterial plus immaterial, it becomes material. There are cases like that. So, as an independent auditor, you want to give an assurance that the financial statement you are seeing is free from any form of material misstatement. That is, irrespective of whatever happened, this misstatement here is so material, it will influence the decision of the users. Let me cite an example quickly. My company prepares a financial statement. We are owing ABC Limited already an amount of 10 million naira. Now, we want to collect another loan from GT Bank, but we are owing ABC Limited or ABC Bank 20 million naira already. GTB is asking for our financial statement, audited financial statement for the previous year. It is expected of us to indicate in our financial statement that this 20 million naira we are owing so, and we are yet to pay. This is the way we are planning to pay, or we are already settling up the interest gradually, but we will pay the 20 million after 2, 3, 4, 5 years. Then GT is interested in your audited report. If GT should see, GT is one of the users. If GT should see that you are owing someone already 20 million naira and you are yet to settle that money, and you're also coming for another loan from, you are trying to seek for another loan from them, what do you think GTB Bank will look at? How will they react? What will they say? Will they proceed to give the new loan they are requesting for? Those are the things GT will check. But let's say my company was able to find a way to keep that 20 million naira information in a way inside that financial statement, misstating it. And GT is able to look at it and say, okay, we can borrow them the 50 million they are asking for. That's just a typical example of a material misstatement. Now, this material misstatement can occur from management to shareholders. Something information that shareholders should be aware of, that when shareholders sees, their decision can change on some matters. But what do? Management, they try to misstate it. They try to present it in a way that looks not too how will I say, is not an issue that they should worry about. And you are the external auditor to check. And you could make misstatements. There is a proof. So one of the assurance, one of the objectives is an assurance that the financial statement is free from any form of material misstatement. Another objective which is important is to establish whether the financial statements are prepared in all material in accordance work. That's part of what we are trying to financial statement standards that guides it. Why the last one says to report on owners of the company. It is their resources, not management resources. Management is only meant to manage the resources and present a report in the form of financial statement to shareholders. So your objective as an independent auditor, as stated by IAS 200, give a reasonable assurance that the financial statement is free from material misstatements. Also give in accordance that this financial reporting followed all framework and standards. And there is a report to be provided on the financial statement to shareholders. Now, where auditor is unable to obtain reasonable assurance and a qualified opinion is insufficient, that financial statement auditing has taken place, no reasonable assurance can be given. Due to the fact that there are issues that the auditor could not find the information about. And he cannot even give a qualified opinion of saying this is showing true and fair view. Neither can he say it showing true and fair view. Now, the standard is saying he should give a disclaimer opinion. A disclaimer. Or preferably resign from the engagement and walk away. IAS 200 requires an auditor to do what? Comply with all IAS relevant, plan and perform an audit within and performing the audit, obtain appropriate. At a point in time, we'll get to see some of the documents he needs to put in place so as to arrive at a decision. Because at every point in time, when you finish your audit, and there are cases on the long run, the question they will ask you is, where are the evidences you have that made you to arrive at this opinion? For every opinion you arrive at, there is an evidence. That's why you need to get sufficient evidence, which will now serve as a backup, as a basis for the decision you're giving. And as a professional in all what you do, whenever you're carrying out your audit and assurance, please be skeptical. Be skeptical. The skepticism there means don't believe every information on the face value. Every information given to you, even when the do something who did it, just over time, everything. So ensure there is assurance be able. Now there is an instruction that as well, not just standards on is out of only that the national standard has superseded it, but it is of note that we must always mention it for classroom purpose. So from there, quickly we look into audit field work. Audit field work. I can't hear. What did you say? Can you hear me?
Your voice has been
Hello?
breaking. That has not been clear.
The voice is breaking. Can you hear me now? Can you hear
Sorry, can hear you.
me?
Yeah, we can hear you, sir.
What was my last statement that you heard?
It just went off. We can't even hear you.
The field work.
You're talking about the
The
field
last
work.
What do you say? Just somebody, one person should speak.
Audit field work.
Audit field work.
All right. Thank you so much. Okay. No problem. Let me take it from skepticism. To iron it down to the audit field work. I hope that is okay. Just give me a chat if that is okay. All right. I'll take it from skepticism now. Thank you for the update. Now, I said, when it comes to skepticism, even if it is an angel that prepares the financial statement, and that angel sits with God in heaven and brings it down to you to audit, you are to be skeptical about every information on that financial statement. Never ever take a financial statement on its face value and like the way it is. As I'm looking at this thing, it is correct. Based on the angel that prepares it, oh, this thing is very accurate. You don't do that. Why? It is your own professionalism that is on the line. If you give an assurance that this thing is good to go, and somebody out there users rely on that, and it comes back to be that what was being said was wrong, excuse will be given on the premise because it is good to go. If I is held accountable. So skepticism is saying don't trust every information on the face value. An example, some of you, and you are privileged, some of us have even gone through what I'm about to share. You are giving school fees to pay in school. At the end of the day, when you back home, something must be asked from you. Are we together?
Yes, we are.
All right. Something must be asked from you at the end of the day when you get back home. Daddy will ask, where is the receipt of the school fees you paid? Is it that you are not the son of your father? Are you not trained? Was it not the one that gave back to you? Was it not the one that trained you in the right way? The right manner? Is it that he does not trust you? He trusted you, but it is expected of him to be skeptical. That is what we are saying. Sometimes when you are carrying out your audit, you will hear some of the management member will say, but that thing, we bought it now, we don't know where we kept the receipt. And because you trusted the person, you said, okay, or you even asked, oh, that motor vehicle, this and that, and you felt said, and you felt like they cannot lie about it. No, be skeptical about every information. When an information is not clear in audit, ask. Preferably, if you know the type of client you are dealing with, you just don't ask alone. You document. Let there be documentation. Be skeptical to that level. Let there be documentation. Let there be a reply. Those are the things that you will fall back on when there are issues that comes up. You present. Those are whenever they were saying sufficient evidence. Let every evidence be sufficient. Not all evidence are sufficient. So you must have sufficient evidence to say, okay, this is how we arrive at our decision. This is why we say close. So from there, we move down to the audit field work. By experience, everybody wants to do audit field work. In fact, everybody wants to do audit field work. But the truth is, not all of us will do audit field work. Some of us, we are good to go for audit field work. Some of us are not too good to go for audit field work. Why some of us? It will be tiring for you. Yes, some people, it will be tiring. Audit field work is not a joke. Sometimes you say, you hear this person saying, please, I want to be an audit trainee. Good. Sometimes you are an audit trainee, you go for audit field work, not because you want to be an auditor, but because it gives you edge to apply for some certain jobs in a company. So when you get the experience as audit trainee, you have edge in some interviews to say, I've addressed financial statements. I know what they are saying. I know what to look at. I know this. So when it comes to audit field work, even when you go, I go for audit field work, any one of us go for audit field work, let it not be just the mindset that you are becoming an auditor. No. It goes beyond that. So audit field work we are looking at is into two: the interim audits and the final audit. They are into two phases: interim audits and final audit. Now, the interim audit is performed before the end of the financial year, which means the financial year of a company, January 1st to December 31st. Now, depending on the volume of transactions of that company, some company does not have much transactions throughout the year. So there is no need for the auditor to come in between to carry out audits before the end of the year. But there are some companies, there is a need for what we call interim audits due to the volume of their transactions. Their volume of transaction alone for 3 months is times 10 of the volume of some companies' transaction. So for that reason, we have what we call interim audits, whereby the auditor goes in to audit before the end of the year based on the workload of the client. It could be 3 months, it could be 4 months, it could be 6 months. That's just it. So for some cases, it could be twice in a year. In some cases, 4 times, 3 times. It all depends. But as long as we are not waiting to the end of the year before we carry out the audit, we call it an interim audit. Now, during this interim audit, it includes discussion with staff and management so as to understand the entity environment. So it will also give the auditor a deeper knowledge and how to plan for the audit in order to reduce the work to be performed at the end of the year. Also, the interim audit will help to record information about their internal control system. Internal control system. Where an interim audit comes into play, internal control system is done, is checked. So where there are issues on internal control system, we can quickly address it and see to it before it gets out of hand. We can quickly see to it. So interim audit helps to solve that. Another part that interim audit try to solve is also it performs some substantive testing procedure or control testing. Control testing, we are still referring to internal control system. We try to check so that we can put corrective measures in place instead of us waiting to the end of the year. We have no reason to wait to the end of the year. We can easily put some of those things in place, some control measures in place to checkmate that thing, and we monitor the results even before the end of the year. So that is interim audit. Why the end of the year? Financial statement is available by the company. It has been prepared, and every balances, every figure has been inserted. So this one is performed at the end of the year. The company on preparing financial statements. Management, they prepare financial statements. At this level, I don't let me create any assumption. But note, it is not the accountant of your company or my company or the auditor that is responsible for the preparation of financial statements. It is management. Management is responsible. So a final audit is carried out after the financial statement has been prepared for the year. Financial statement has been prepared. The auditor will come in and perform the needed audit. Now, there is a clause you must understand. In practice, interim audit work is usually performed by fewer but more senior staff. Why final audits takes much longer period and involves a whole audit team. So what does that connote? When it comes to interim audits, a few number of persons is enough, especially the senior auditors, maybe 2-3 senior auditors, then they have one trainee with them, they are good to go, depending on the work. But when it comes to final audits, you are looking at a whole sum of the financial statement. So it takes more time there is more time to be spent on final audits. More resources is consumed. Number of persons needed on the job is also more. With all of this, it also depends on the activity of the client. The activity of the client. The activity of the client. A manufacturing company like Dangote cannot be compared with a pure water company that is just producing within a state. We cannot compare such activity. The two cannot be compared. So when you're saying we are auditing Dangote records, it's not the same thing. We are auditing a pure water company that is producing and selling within Ogun State. It's not the same. All right. So quickly, we move to the next phase of what we are to check tonight. And that is the aspect of advantages of statutory audit. By the name, it implies a statutory audit means it is mandatory by the law. It is not an option. It's compulsory. The law states how it's to be done. The first thing there says it increases the credibility of published financial statements. Most of us have seen published financial statement of banks. And when you see it, you will see the audited report, the audit report page, how it was stated, and the audit firm signing. And it's going all over the world. It's being used all over the world. So it will give that credibility to financial statements when a company carries out statutory audits. It confirms to management that they have performed their statutory duties correctly. That is, they have adhered to what is being stated by all the laws, standards, that, okay, they have obeyed, they have done what is expected of them. Another one there is that it provides assurance to management that they have complied with non-statutory requirements as well. such as corporate governance reports, which is known as CSR reports. While the next one says it provides feedback on effectiveness of internal controls. See, most times, even when you're going for audits, be sensitive to internal control system. Be very, very sensitive. Everything you want to do, maybe you don't know, or maybe you know. The financial statement prepared by management, you have the accounts department. You have a department called internal audit. The internal audit department is like the eye, the leg of every policy put in place by management. So your work will be easier if the internal control system after testing is strong. It makes your work easier. So don't joke with internal control system of every client you're going to audit. Check the internal control system. Don't panabit it. Don't try to. Are they having a strong internal control system? Is it a weak internal control system? Check, assess it, and be sure. All right, the next one there is also a summary which states that even where statutory audit is not required, for example, for a small company, an audit is still useful because it increases the credibility of such accounts and make them tenable to potential lenders like banks who may insist on audited accounts as part of pre-condition to lending money. Now, if you will be asking me, do small companies need audits? Yes. By Finance Act 2020, Finance Act 2020 already stated a small company for tax purpose is a company that is having what? 25 million and below. That's a small company. Medium, above 25, below 100. Large company, 100 million and above. So, a small company, we'll put it in this category. So we will not be thinking like, what is a small company? Who is a small company? As long as the company cannot make turnover, sales of 25 million and above, anything below 25 million, we see such a company as a small company. So, do they need audits? Yes. Can they carry out audits? Yes, because they also need growth. And when they are seeking for fund, every potential lender is in need of their audited reports to check. So whenever you are trying also to audit a small company, be sensitive, be careful, know what you're doing before you give an assurance report, so that the bank that gave money out to them will not come and hold you later and said, but you said there's an assurance report that said this company is so. So before you know it, you'll be on your own. All right. So we also have limitations of statutory audits. What are the limitations? The first one there says audit cost is usually high. This, we cannot shy away from it. We cannot shy. And as a result of that, small companies don't try to have a way of not engaging. But these days, small companies, it's compulsory. New laws are coming into play. Some companies are being captured. Some businesses are being captured these days for tax purpose. So there are changes in the system. So it's becoming compulsory. While the second one, during audits, company staff may be disrupted because they may be required to attend to audit team by answering questions and providing documents. That one is all, it will always happen. There's not, in some cases, the whole company is on their toes when you are in external audit. All the whole company from A to Z, they are on their toes. If it's a government entity, everybody in that entity, they are all on their toes. They have no option. They just have to. When you cough, they are coming running. When you sneeze, they are looking. When you call one person for questioning, everybody is like, hey, there's trouble. Because still in the system till date, some people does not understand that auditing is not witch hunting. Yes, they still believe it's just like that. All right, we proceed to the next one, which says some items in the subject matter are estimates. Truths and fairness may not be known until sometimes in the future. This renders assurance opinion subjective and judgmental. That comes down to your own professionalism now. The item you are trying to look into is an estimate. When we put computation together, we cannot reliably say this computation will result into this figure on the long run, which means the future will determine. So it gives a problem. It gives a challenge that how do I report my assurance? So sometimes you will now see an auditor using subject to, except for so item that the estimate cannot be readily determined. All other things shows a true and fair view. Subject to so outcome on so amounts, estimates, activity, events. All other things shows a true and fair view. So we do have cases like that. Another limitation there is in the course of cost efficiency. Auditor routinely uses sample instead of testing the entire items. This one is very, very common in the field for auditors. There is no 100% audit. I hope you have heard that before. The reason why we always say no 100% audit, sometimes because of the workload being carried out. So auditors are allowed to use sample. Using a sample, testing, then using it to generalize on the others. Sometimes there is error of overgeneralization. Error of overgeneralization. So as a result, one after the other is costly. That's the truth. Time consuming, energy consuming. So that's one limitation of statutory audit. Another limitation is irrespective of how robust a client system is. Note, client system, internal control system. There is always some degree of inherent limitation incorporated in the system. In audit, we have three audit risks. One of the audit risks is an inherent risk. We have control risk. So when it comes to this inherent, that's what we are trying to say, that irrespective of the client strength of internal control system, there are some issues them out. You can't take a material misstatement to exist. So you must be careful. It's a limitation. Based on the industry such a company is carrying out their activities. Why the last one there is saying an auditor, an audit evidence is usually persuasive rather than conclusive. Saying it is final and final. An auditor gives assurance on internal control of the company and on social and environmental reports issued by the company. With the limitation being discussed, we can readily say we are done with chapter 1 of audit and assurance. I think let me use the next 10 minutes just to introduce the chapter 2. So by the time we are meeting next, we know we have already introduced the chapter 2. The chapter 2, please kindly let your question be intact. After now, I'll be asking for questions if there is any. For the chapter 2, we're looking at professional ethics and code of conduct. This is an interesting topic. In fact, I love the topic so much, because this is the one that now governs you and I. This is a lot of place where people will find it interesting and say, why can't I do this when I discovered this? When I saw this, why is it that I did not, I cannot? Who am I to report to? Who am I to talk to? Who am I to relate with? So under this, we said statutory laws regulate some aspects of auditing to a degree, but by far length. All accountants are required to comply with regulations and codes of professional body they belong to. So you and I, we are belonging to the professional body called ICAN. So we have ICAN Code of Ethics. IFAC has Code of Ethics for Professional Accountants, published by the IFSBA. This same code has been adopted by ICAN. And guide for members. That's the name being given to the Code of Ethics by ICAN to its members. So whether you are a student or you are not a student, you have to comply with this professional code of ethics, code of conduct and ethics. It's important. The code also applies to staff of ICAN, whether they are member of ICAN or other professional body, as long as you are a staff of the institute, you have to comply, obey. From there, quickly, let's look at acting in the public interest. Acting in the public interest. When you are to act in the public interest, remember what we are saying. Anything you are trying to do at the end of the day as auditor, you are giving an assurance. And the assurance is for the public, not for you. The assurance is for the public. So the public interest is on your mind. You are seeing the public, you are trying to protect the public interest. So from there, you want to look quickly, what is this public interest we are talking about? One of the features of profession, one of the features of a profession that separates it from mere vocation or trade is that professionals are expected to act in the public interest, not to act exclusively to satisfy the needs of a particular client or employer. In a situation where the interest of their client and that of the public conflicts, the interest of the public prevails. Did you see that? The interest of the public prevails. Interesting, right? Where there is a conflict, you have to look into the interest of the people where it is possible. Example now, the following are examples of public interest. Protecting the health and safety of the public. You checked your client's reports. You saw that the corporate social responsibility expected them to give, they are in the health industry, and is affecting the public. That must be override. You must go with the public interest. Managing the public fund or assets effectively, it must override your employer or client's desire. Expose any misuse of public funds to authorities. Report management of funds and fraud. Not misleading the public with their professional opinion. Why the last part I'll be taking for tonight is what is the expectation of the general public from you and I as professional, whether you're a member or a student member, anyone you belong to, or a staff. The general public expects high discipline from every of us. First, they are the ones that present the performance and position of the company to them. That is, we do that. Auditors are protecting against fraud. They ensure true and fair view of transactions, and they provide information that prevents excess capitalism. So with this in place, we are expected to do these things. Auditing as a whole, as people will always look at it, it's a dangerous job, but it's a good job whereby you are giving assurance, you are making the environment safe for companies, for investors, for shareholders, for users, and you are seeing that also growth is taking place. Where there is growth in a system, there is bound to be development. So on this note, I would like to conclude. If there is any question, please kindly drop your questions and let me attend to them. You can raise your hand to notify me if you have a question. Okay, I have Osita. All right, Osita, you can speak. Osita, you have the floor.
Good evening, class. Good evening, sir. Please, do we get handouts or notes for these lectures, or do we rely on our study packs?
A summary note is available. You just need to communicate with Kabiru. Just communicate with Kabiru. You will get the summary notes for a token. He has done a summary note, and I will always give that advice. The summary note is far more easier to study and easily understood. It's a summary of the study pack anyway. So whether you're using the study pack, no problem. But this is the summary note is available also.
Thank you,
is that
sir.
all?
Yes, sir. Thank you, sir.
All right. Okpeyemi, you have the floor.
All right. Good evening, sir.
Good evening, ma'am.
Yes. Thank you for the lecture. So I wanted to confirm how to get this particular pack, because I don't seem to be able to find it online.
The study pack?
Yes, yes.
Okay, just drop what's it called? Drop a note for me after now. Just drop a note for me after now on WhatsApp.
Okay, sir. Thank you, sir.
Welcome. Any other question? No question? Okay, I have a DBC. You have the floor.
Good evening, sir.
Good evening, sir.
So what do you understand what do you mean by internal control system?
I can't hear you clearly.
What do you mean by internal control system?
Okay. Now, when we talk of internal control system, we are talking about a system set in place by the management to protect the resources of the organization. That's just it. Not only just the resources, to ensure that recording documents are properly kept for every transaction. So, to drive it down better, example, in an entity, we need cash. When cash is to be withdrawn from the bank of the entity to the office for use, there's a process. Somebody must sign. Another person must sign before it is taken to the bank. Those signatures that must be before bank will honor it is an internal control system for cash issuance. You want to go on leave in your organization. You want to go on leave. How do you go on leave? Do you just wake up the next morning and say, I'm not going to work today, I'm on leave? No, it's not possible. What do? There is a process that management has put in place that you must follow before you go on leave. So that process, that stage, writing the needed letter, you must be qualified for leave, this and that and that. It must be approved by your head of department before it gets to a particular table, human resources head, before it is approved. That is internal control system for leave. Another example could be for assets. A particular department is in need of photocopy machine. Do they just go straight and get photocopy machine? No. That department is expected to raise a requisition, pass it through a channel which the management has already made known to everybody. Such will be passed through all the tables before getting to the final table. Approval is being given, then photocopy machine is bought. By who? By the purchasing department. Purchasing department gives it to the store or to the warehouse. The department in need goes to the warehouse and requests, fill the needed form, then it is issued down to that department. All those ones are internal control system. Hope I've answered your question, sir.
Yes, sir. Thank you so much, sir.
You're welcome. Now I have Bright, you have the floor.
Good evening, sir.
Good evening, ma'am.
Can you hear me, sir? Thank you, sir. Okay.
Loud and clear.
My question is, you made mention of types of risks associated with carrying out audits, which you mentioned inherent risks and controlled risks. If I heard you correctly, you said there were 3, which I didn't hear the third one.
Okay.
Then secondly, if you don't mind, can you shed more light on the controlled risks
Okay.
as related to the act of carrying on an audit?
Okay.
Then also, I would also want to have your presentation, because I've checked on the group, which I am, the audit group that I am. I didn't get the syllable update attached there. So I don't know if there's a reason for that. There were orders being sent, but audit wasn't.
Okay. No problem.
Yes, sir.
Do me the last question you asked. Do me the favor of just sending me a message. I think I have it. I'll forward it to you.
Okay, sir.
All right. To answer your two questions, the inherent risk, we have the control risk,
Yes.
and we have the detection risk. Inherent, control, and detection risk. By the time you go in depth in your audit directly, we said when it comes to control risk, it's trying to system exists, yes, but it is inadequate. It is not effective to identify misstatements timely. So we look at those controls, their control risk, we look at them. So in summary, inherent and control risk comes with the internal control system of the client, while detection risk comes from the part of the external audit procedure. Thank you.
Thank you, sir.
Yes, ma'am, you're welcome. Okay. I think I've answered all the questions. All right. So at this
Hello, sir.
point, please, I've only told 2 persons to communicate with me. Ma, I can hear you. What's that?
Sorry to bother you further. Please, is this class recorded?
Yes.
Okay, sir. Thank you.
Thank you very much. All right. At this point, I'll be saying good night to every one of us. Stay safe and ensure you read. Oh,
Thank you, sir.
Thank you, sir.
somebody is asking, oh, BJ, why are you raising your
Hello,
hand
sir.
late?
I also need the study pack. Like I don't have the study pack or the summary or anything.
Oh, yeah, just chat me. Thank you and God bless.
All right.
All right, stay safe, everybody. Thank
Thank
you. Have a lovely night
you,
rest.
sir.
Thank you, sir. Good night.